I'm Anna, the top woman trader in the world, and I assist inexperienced traders in generating profits. In this video, we'll discuss how to open your first trading account. See you after the intro. Good morning, traders! Before we dive into this ocean of trading knowledge, I have something important to tell you. If you want to see how to put all these great theories we're about to discuss into practice, don't forget to check out my courses. There, you'll be able to see how to trade on stock indices and commodities. It's like sitting right next to me as I try to tame these financial bulls and bears, but without the risk of me stealing your coffee. I hope you're comfortable, because today I'm taking you on a journey into the fantastic and a bit crazy world of online trading. I know, some of you are already thinking, oh no, how boring, but I promise I'll try to make everything more fun than a TV series marathon. So, let's start with the basic. What the hell is online trading? Basically, it's like shopping for financial instruments, but instead of buying clothes or gadgets, you buy and sell stocks, currencies, that kind of stuff. And you do all this from your computer or smartphone. Cool, right? Let's make a practical example. Imagine you want to buy Apple stocks. In the ancient world, you would have had to call your broker, wait for him to do his magic, and then receive a confirmation via carrier pigeon. Okay, I'm exaggerating, but you get the idea. With online trading, instead, it's all in your hands. Click, click, and boom, you've bought your Apple stocks. It's fast, it's convenient, and it makes you feel a bit like Gordon Gekko, but without the hair gel. But beware, guys. Before you dive into this world as if it were a pool full of money, there's one fundamental thing to do. Choose the right broker. It's like choosing a dance partner. If you're not in sync, you'll end up stepping on each other's toes. And what you should look at when choosing a broker. Well, there are a few things to consider. First of all, reliability and regulation. Guys, this is serious stuff. You need to make sure that broker is regulated by some important entity. In the United States, there is a SIC. In Europe, it could be SIC or FISIC. It's like the quality seal on the apples and supermarket. It guarantees you not buying rotten fruit. Let's make an example. Imagine depositing 10,000 euros on an unregulated broker. One day you try to withdraw your earnings and poof, the site has disappeared, along with your money. That might be a scenario, right? That's why regulation is so important, and it's not just about security. A regulated broker must follow process rules like the separation of client funds. This means your money is kept in separate accounts from those of the broker. So even if the broker were to go corrupt, hopefully not, your money would be safe. It's like having a personal safe in a bank instead of keeping money under the mattress. Then there are costs and commissions. Guys, you need to be careful here. Commissions may seem small at first, but then in the long run they can eat up a good chunk of your profits. Let's make another example. Suppose you make 100 operations a month. Broker A charges you $5 per operation, while broker B charges you $10. Seems like a small thing, right? But do the math. With broker A, you'll spend $500 a month in commissions. With broker B, a whopping $1,000. In a year, the difference is $6,000. With that money, you can have a nice vacation in the Caribbean. And don't just look at the commissions for trading operations, but also all those hidden costs, deposit and withdrawal fees and activity costs, spreads. In short, do the math carefully. For example, some brokers charge you a commission for withdrawals. Imagine you've made a winning trade and want to withdraw $1,000. If the broker charges you 1% of commission, you'll end up with $990 instead of $1,000. It may seem little, but if you make frequent withdrawal, these commissions add up. Another thing to consider is the variety of financial instruments offered. What do you want to trade? Stocks, forex, options, ETFs? Make sure the broker offers all the toys you want to play with. For example, if you're passionate about cryptocurrencies and want to trade Bitcoin and Ethereum, make sure your broker offers them. Not all do. Or maybe you're interested in stocks of small growing companies, the so-called small caps. Some brokers offer a wide selection, others limit themselves to the most well-known blue chips like Apple, Google, and stuff like that. Imagine you're super excited about the potential of a small biotech startup. You've done your research. You're convinced it's the big thing. But then you go to look for it on your broker's platform. It's not there. Frustrating, right? That's why it's important to choose a broker that offers a wide range of instruments. Let's move on to the trading platforms. Guys, this is your interface with the market, your cockpit, if you will. It must be intuitive, easy to use, but at the same time powerful and feature-rich. Imagine you want to analyze the gold price chart for the last 6 months. A good platform will allow you to do this in a few clicks. Add technical indicators like moving averages or SCI and draw trend lines. All this must be easy and intuitive. If you find yourself checking around for 10 minutes just to change the chart time frame, well, maybe it's not the right platform for you. Think of the trading platforms as your virtual office. It must have everything in hand. Do you want to see how S&P 500 is performing? Click. Do you want to add a Bollinger Bands indicator to the euro-dollar chart? Click. Click. Do you want to place a step order on an open position? Click, click and click. It should be that simple. Let's not forget about customer service. I know, it seems like a trivial thing, but believe me, when you have a problem, and sooner or later it will happen, trust me, you will want someone to answer you quickly and competently. Imagine this scenario. You're about to make an important operation, but the platform freezes. Markets are moving, everything counts, you call support and they put you on hold for 30 minutes with an irritating little tune. Frustrating, right? That's why good customer service is essential. Or think about this. You have a question about the taxation of your trading gains. Yes, you have to pay taxes on them. Sorry. If you contact customer service and they respond with a copy-pasted message that has nothing to do with your question. Not great, right? A good broker will have a competent support team able to answer technical, financial, and even legal questions. Okay, once you've chosen the broker, it's time to open the account. Usually it's a fairly simple process that's all done online. They'll ask for your personal data, name, surname, date of birth, address, nothing complicated. But beware, you will also need to verify your identity. Serious brokers require this for security and regulatory compliance reasons. They'll ask you to send a copy of an ID document and proof of your residential address, like a utility bill. For example, you might need to send a scan of your passport or ID card, plus an electricity bill or recent bank statement showing your address. I know, it might seem like a hassle, but it's for your security. Think of this process as a security check at the airport. Yes, it's a bit annoying to have to take off your shoes and have your bag x-rayed, but do you prefer to fly on a plane where everyone can board without checks? The same goes for trading. These checks serve to protect you and other traders from fraud and illegal activities. Oh, and before clicking on I accept, read the terms and conditions carefully. I know, it's as boring as watching paint dry, but it's important to understand well what you are signing. For example, some brokers have clauses on forced liquidation. It means that if your account falls below a certain margin level, they can automatically close your position. It's something you should know before you start trading, don't you think? Imagine you have an open position on euro-dollar. You're convinced that dollar will strengthen, but there is negative news and then the price temporarily drops. If you don't know about the forced liquidation clause, you could find yourself with the position automatically closed at a loss, just before the price bounces back as you had predicted. Not ideal, right? Well, now that you've opened the account, you will need to find it with some money. There are various ways to do this. Bank transfer is a traditional method, but it can take a few days. If you want to be a master, you can use a credit or debit card. Many brokers also accept electronic wallets like PayPal or Skrill. Some even offer instant transfers. Let's make a practical example. Suppose you want to deposit $1,000 with a bank transfer. You might have to wait 2-3 business days before seeing the money in your trading account. With a credit card, on the other hand, the deposit would be instant. But be careful, some credit cards treat deposits to trading accounts as cash advances, applying extra fees. Make sure you're well informed before choosing the method. And remember, never deposit more than you can afford to lose. Trading is risky, and even if you're really good, there's always the possibility of losing. So if you're thinking of depositing next month's rent money, stop. Think again. Trading should be done with money you can afford to risk. Now you're ready to start trading, but take it slow. Don't forget all your savings into the market right away. Trading is risky, never forget that. Start with small amounts, practice, and maybe use a demo account before moving to a real account. For example, many beginner traders start with a demo account of 10,000 virtual dollars. They practice for a few months, test different strategies, and learn to manage emotions without risking real money. Only when they feel ready and have a solid strategy to do, they move to a real account, maybe starting with $1,000. Think of demo account as a flight simulator. Pilots spend hours and hours on these simulators before piloting a real plane. Why? Because they can make all the mistakes they want without consequences. The same goes for trading. Better to burn 10,000 virtual dollars than 1,000 real dollars, right? And here comes the most important part: study. Guys, trading is not gambling. It's not a matter of luck. It's like a serious activity that requires knowledge, discipline, and continuation commitment. You need to study the basics of trading, understand how markets work, learn to read charts, interpret indicators. Let's make an example. Suppose you want to trade the euro-dollar exchange in Forex. It's not enough to look at whether the dollar is rising or falling against the euro. You need to understand what influences these movements. Interest rates from ECB and the Fed, economic data like GDP and inflation, geopolitical tension, all these influences the exchange rate. And you'll need to learn to interpret this information to make informed trading decisions. It's like being a financial detective. You have to gather all the clues, put them together, and try to understand where the market is heading. A good trader is like Sherlock Holmes, but instead of solving crimes, he solves financial puzzles. Follow market trends, stay updated on the latest economic news. Believe me, events that may seem far from finance can have huge impact on markets. For example, remember when in 2016 the UK voted for Brexit? The markets didn't expect that. The pound crashed 10% in one night. Those who were prepared were able to exploit this opportunity. Those who weren't, well, they learned an important lesson about risk management. Or think about what happened with COVID-19. Who would have ever thought that a pandemic could cause a market crash followed by an incredibly rally? Yet it happened. And those who were prepared, who had studied market history and understood how they react to extreme events, were able to navigate these turbulent waters much better than those who panicked. And above all, maintain discipline. Trading is an emotional activity, I know that well. There are moments of euphoria when you make a good trade and moments of panic when things go wrong. But you have to learn to control these emotions. Imagine this scenario. You've opened a long position on Tesla, convinced the price will rise. But suddenly Elon Musk tweets something controversial and the price crashes. Panic assails you, you want to close the position immediately to limit losses. But is that the right thing to do? Or is it an emotional reaction that will make you lose an opportunity when the price recovers? That's why discipline and emotional control are so important in trading. It's like being a surgeon. When you are in the operating room, or in this case in front of your trading screen, you can't afford to get caught up in emotions. You have to stay calm and focused and follow your plan, even when things go bad. If you want some advice, take a look at my membership. You will find a lot of useful information to start in the right way. I've put together years of experience and knowledge to help new guys take their first step in the world of trading. Remember, patience, discipline, and continuous study. Trading is not a race, it's a marathon. Don't expect to become millionaires overnight. If you do it in the right way with commitment and dedication, trading can become a really rewarding activity. Let's make one last example to understand the importance of patience. Imagine you've developed a trading strategy that has 60% success rate. Sounds good, right? But this means that 40% of the time you will lose. There will be periods when you will have a series of consecutive losses. Patience and discipline will serve you to continue following your strategy, knowing that in the long run it will be profitable. It's like coaching a football team. You can't expect to win every game. There will be wins, draws, and losses. The important thing is that at the end of the season, the accumulated points take you to the top of the league. And one last thing, be careful of scam brokers. Unfortunately, there are some out there. If someone promises you impossible returns or asks for advance payment, raise your antennas and stay away from brokers that base their business model on CFDs. In most cases, they are scams. For example, beware of brokers that promise guaranteed 100% gains in a week, although that ask you to pay a registration fee before you can withdraw your profits. There are all red flags that should make you run away as fast as you can. It's like when someone offers to sell you the Colosseum at a virgin price. If it seems too good to be true, it probably is. Well, I hope this information is useful for you to start your trading adventure. I know it can seem intimidating at first, but with the right approach and the right mindset, anyone can learn. Remember, trading is a journey, not a destination. Keep learning, improving, and perfecting your strategies, and don't be afraid to make mistakes. They are the best learning opportunity you will have. For example, you could keep a trading journal. Note down every operation you make, the reason why you made it, and the result. Over time, this will help you identify your strengths and weaknesses, allowing you to constantly improve. It's like keeping a personal diary, but instead of writing about crashes, you write about your trades. And instead of reading old pages and thinking how embarrassing, you read old trades and thinking, wow, how much I've improved. Good luck and happy trading to all. And remember, the best investment you can make is in yourself and your financial education. Keep studying, practicing, improving. Success in trading doesn't come overnight, but with commitment and dedication, it's within everyone's reach. And if you ever feel discouraged, remember that even the greatest traders started from zero. Warren Buffett wasn't born knowing how to read a balance sheet, and George Soros didn't come out of the womb trading on the forex. They studied, they made mistakes, they learned, and they improved. And you can do the same. So guys, are you ready to start this adventure? The world of trading awaits you. With all its challenges and opportunities, it won't always be easy, there will be ups and downs, but I promise you, it will be an exciting journey. So what are you waiting for? Go out there and conquer those markets, and please let me know how it goes. I'm here for you, ready to celebrate your success and cheer you after defeats. Remember, in trading as in life, what matters is not how many times you fall, but how many times you get back up. And if you really want to understand how I manage these situations in daily practice, my courses are just what you need. I'll explain exactly how to recognize signals on the charts of stocks, indices, and commodities, how to set the right money management, and how to protect your capital. You will understand in detail how to apply these strategies in the real world, with practical examples and concrete trades. Think about where could be in a year if you started learning the right strategies today. I look forward to seeing you in my courses, where you can understand all these techniques in detail and much more. It's time to move from theory to practice. Remember, the market is out there, full of opportunities. It's up to you to see them with wisdom, a bit of courage, and why not, with a little help from me. See you on the other side, biting traders. And remember, if you feel lost in the maze of charts, or if the RCI seems more complicated than a Chinese restaurant menu, you know where to find me. I'm here to turn your hopes into loves.